Talk me through what kind of range you see for the price of oil. 2-3 weeks ago, we were saying, look, OPEC has cleared the market. This agreement between Saudi and Russia was enough to actually curtail some of the proposed oil. But now it seems that shale, once again, at the forefront.
Well, absolutely. The crude oil bulls in this market for the last 3 years have always tried to downplay or simply ignore the rise in North American oil production. So even from November 2016 to November 2017, the last month for which we have the monthly data, we have the absolute fact that U.S. production, shale growth production, has outpaced the decline in OPEC production by 7%. So there's actually more oil being put on the market by the U.S. than there is being taken off by OPEC. So essentially, we're in the midst of the correction. Last week, or the year-to-date high is just around in the mid-60s. We're looking now at the new range. The paradigm has changed over the last 3 years. We were essentially looking at a market that was bound in between the mid-50s on the high end to the mid-40s on the low end. I'll venture that we've moved $10 higher now going through to the new year. That is to say that the high in the market is looking around to be in the mid-60s. The low in the market, well, if the previous resistance was in the mid-50s, then today's support would be in the mid-50s. So we're looking at a market likely range bound in between the mid-60s to the mid-50s to low 50s in the new year.
Stephen, how is that driven by dollar? So, of course, a weaker dollar drove oil's advance in January, but then it rebounded a touch.
Yeah, absolutely. The dollar is extremely important, a very strong correlation between and an inverse relationship between the dollar, given that the dollar is the world's invoicing currency. So we've had a lot of issues over the past few weeks with the Secretary of Treasury seemingly advocating a weaker dollar policy. This was the same policy that was pursued 15 years ago, and it was a policy that undoubtedly led to the spike in oil prices. That is to say that if you are a producer, you do not want to be paid in a currency that is being kept artificially low by government fiat. So if you keep the dollar low, you actually stiffen the resolve of OPEC and Russia and even the United States to keep production off of the market because you need to earn that income. But if you do have a stronger dollar, that does ease the pain. So the Federal Reserve, the Secretary of Treasury, will be just as important to the direction of oil prices as OPEC and producers here in North America.